All right, let's jump right in. You might have noticed a lot of, well, stuff happening in the tech and finance world lately. And on the surface, it all seems pretty random. You've got a crypto giant hitting a wild milestone, a ride-hailing app buying an investment firm, and a shopping site that's suddenly a massive bank. But if you look a little closer, you start to see they're all following the same brand new playbook, one that's completely rewriting the future of money. First up, the crypto exchange Coinbase. They just announced their total trading volume hit, get this, $5.2 trillion. I mean, to put that in perspective, that's a 156% jump in just a single year. It is an absolutely mind-boggling number.
Okay, so while that's going on, something totally different is happening over in Southeast Asia. Grab, the ride-hailing super app, makes this really surprising move. They dropped nearly $500 million to buy a U.S. digital investing platform. Kind of comes out of nowhere, right?
And then there's this third piece of the puzzle. The Japanese e-commerce giant Rakuten quietly reports these record-breaking profits. And what's driving it? Almost all of it is coming from their Fintech divisions. We're talking credit cards, banking, and securities.
So what is the connection here? You've got a crypto exchange, a ride-hailing app, and an online shopping mall. Are these just random, disconnected business moves, or are they actually signals of a massive shift in how you are going to manage your money in the very near future?
Let's start with Coinbase and their huge ambition to become, well, the everything exchange.
Now, this is where it gets really interesting, because you see this kind of conflict happening with Coinbase. On one hand, their numbers are incredible. I mean, trading volume is way up, their global market share has doubled, and they've got over 1 million paid subscribers. Total triumph, right? But, on the other hand, investors are skeptical. The stock actually went down because the company missed some profit targets, and people are worried about fee growth slowing down in a pretty shaky crypto market.
So what's Coinbase's answer to all that skepticism? It's to think bigger, way, way bigger. They're trying to build what they call a financial OS, a financial operating system. The goal here is a single integrated platform for literally all of your financial life.
And this quote just nails their strategy. Remember when Netflix was all about mailing those red DVD envelopes? They realized their future wasn't in plastic discs. It was in owning the entire streaming experience. That's exactly what Coinbase is trying to do. They want to move way beyond just being a place to trade crypto. They want to be the one-stop shop for everything. Trading, earning, staking, which is just earning rewards on your crypto, payments, the whole shebang. Okay, now for our second signal. Grab's surprising move and their search for what we'll call customer stickiness. I mean, you gotta ask, right? This is the question that had a lot of people scratching their heads. Grab is the app you use for food delivery or to get a ride. Why would they spend almost $500 million on Stash, an American investing app? Well, it turns out it's actually a very calculated three-part play. First off, they're making their product deeper. They're moving from just simple one-off transactions into helping people build wealth, which is a much, much deeper customer relationship. Second, they get to just skip years of R&D by instantly buying up matured tech and talent. And finally, they add a stable, subscription-based revenue stream. And that's the kind of predictable money that investors absolutely love. So here's the bottom line. Grab is making a huge bet. They believe that helping you save and invest is going to make you a much more loyal or sticky customer than just ordering a burger or catching a ride ever could. Which brings us to our third and final signal, Rakuten. Now, these guys aren't just starting this journey, they are a perfect example of a powerful ecosystem engine that's already firing on all cylinders. This table shows their model perfectly. It's this brilliant feedback loop. The Rakuten card gets people to spend more on their e-commerce site. That's the GTV, or gross transaction volume. Then Rakuten Bank captures all the money from that activity. And finally, Rakuten Securities helps grow the user's wealth, their AUM, or assets under management, and it keeps all of that money right inside the Rakuten ecosystem. You see? Each part just makes the other stronger. So what Rakuten proves is the incredible power of this embedded finance playbook. It's this idea of weaving financial services, like banking, credit, investing, so seamlessly into a big digital platform that they just become a natural part of the whole experience. And their success shows this isn't some pie-in-the-sky theory. It's a hugely profitable model that's already working at a massive scale, especially outside of the US. So let's connect all the dots. We've looked at 3 different companies in 3 totally different markets. What does it all add up to? Well, it adds up to a single, powerful new playbook for the future of finance. So in the end, these aren't isolated strategies at all. They're really three pillars of one powerful game plan. You start by building a complete financial OS. That's the lesson from Coinbase. Then you use that system to offer sticky wealth products that create real loyalty. That's the grab lesson. And you embed it all so deeply into your ecosystem that it becomes second nature for your users, just like Rakuten has already perfected.
And this all leads to the final, crucial question for every single one of us. As the lines between tech and finance just completely dissolve, who's going to win this race? Is it going to be your traditional bank, some new fintech startup, or will it be the app you already use to order dinner or catch a ride? The battle for your wallet is officially on, and the playbook is changing right before our eyes.